Good afternoon, everybody. Welcome back to my channel. It is me, the Millennial Investor 1914. I'm here to help you. Holla at your boy. Today, we have a special video. Yes. My last video I made about how you can make how you can make $400,000 and how you can retire and live off that. So hope you guys go and watch that video. Make sure you like and subscribe to my channel. I'm definitely feeling a lot more comfortable in speaking, a lot more comfortable with my YouTube videos, a lot more to share. I have definitely, I'm excited. I have a lot of things that I want to buy, a lot of things I want to uh, just do with my portfolio. But with today's video, we're going to talk about how I built my 100K net worth dividend stock portfolio. I finally did it. I finally reached over 100K in liquid net worth. Definitely was something that I, man, I definitely been working hard at it. And now my next goal is to get my dividend growth portfolio. I finally begin to start to round out how I want to invest into it. Around October, I really, and I'm gonna share it at the end, basically how I want to move forward in regards to certain stocks. It's a dividend growth portfolio for a reason, and I want dividend growth, but I also want total return. And so it's really trying to find that balance between stocks that increase its net worth through buybacks and stocks that really increase its just worth with just dividend increases, and just finding the balance of what stocks that I like and I don't like. It's all a part of your journey. Here we go. Just so you guys see right here, uh, my net worth is creeping up, and I wanted to go just in some detail. Don't want to make this video too long. It's a green day. I've been investing roughly $1,000 to $1,050 into the market. Let's start out with my first bucket. My first bucket is my money market account. I have 5,000 going into next month. I should receive some more interest for just keep my money here. The purpose of my money market account is that, excuse me, is that I have some things that I want to buy and update around my house. I have to update my frame around my house. Some things I need to buy in my house just to update, because I want to focus on just my house renovations since I just came back from Brazil. Uh, that's what I've been wanting to do, and so I've been keeping money into this account. It's pointless to keep your money into a bank account that's receiving less than 1% in just interest while inflation is running wild. So I'd rather put it in a money market account and receive 5% a month. You can't beat that. Moving forward, here's the star of all of my accounts. Why I would say I pay closely, roughly 80 to 85%. My portfolio, uh, which would go in regards to like dividend increases, how much I made. That'll be another video for next month of the dividend increase that I received for the month of March. But for my 1 year, my portfolio is up 22%. I I wish I would have made this video when it was June 20th. My portfolio had hit the peak of 60,000, but lately, because of the whole Nvidia slides and whatnot, my portfolio has really been like arching out. So you see, my portfolio has peaks and valleys. I'm in a valley right now, but I'm still year to day up. I'm up today, so I'm up around 59,000. And as you can see, I've really came up. I've came a long way these last several months, and me adding $1,000 per month has really been adding to this account. But and we're just video is just really to show the steps that has been leading to my 100K net worth. Some of the stocks that has been really leading to my 100K net worth, as you see right here, is Microsoft, Broadcom. I really wish you can see it. I'm really up I'm up a lot. I'm up a lot. Just to show you how much I'm up a lot. Oh, I can't really say. My cost basis is like $750. My cost basis used to be $500, but I began to average up, and so my cost basis is $750, and it's at uh, almost close to $1,600. So that really shows you outside of Microsoft, Broadcom has really. So a lot of the days when my portfolio really backslides because probably Microsoft and Broadcom probably did bad. But if semiconductors or if Microsoft do good, my portfolio lifts. And Kroger has just recently increased its dividend yesterday. I love that. I increased $10 more into my dividend yearly amount. Appreciate that. And then so on and so on. As you see, I have applied materials. I have certain semiconductor stocks. I have Google. I've been building up my Google position. Uh, and just goes for more experienced investors. I've been taking a lot of notes for you guys. Shout out to you guys, a lot of dividends investors, PPCN, and a lot of these guys, Ryan Williams and Ryan from that's out in Nevada, Las Vegas. I teach as an investor, you take pieces and you learn, and as a dividend investor, you watch the videos like this and you want to figure out your best strategy. And I figured that I love semiconductors. I love information technology companies, but I also love a mixture of companies that pay the dividend, increase the dividend. And if you was to look at the dividend yield of this portfolio, it's around 2%. And it's not super high. And what I've realized is that, and hopefully you guys that's looking at my portfolio, if you used to take note, if you're in the beginning stages or the middle stages, how I reached my net worth of over 100K, I begin to switch up selling a lot of high yielding stocks. I like high yielding stocks, but I've been doing research. I've been seeing not gonna lie, the Magnificent Seven has earned a lot of people a lot of wealth. The Nvidias, the Microsofts, the Apples, the Nvidias, the Googles, the Metas, uh, and even Tesla. You added, uh, I've been seeing that the commonality is that a lot of people with high net worth, they have portfolios of the stock that it's just Google and Meta has just recently just started paying a dividend. But I've been seeing the commonalities that to have an increased net worth, to get wealthy, to to have your balance to increase, you got to have those in your portfolio. If you don't, and I was hard headed, and if there's one lesson that I wish I could have done, that if you guys that watch my videos, would just if you're new, just take a hold of it, is that I always wanted to try to beat the market when I first started. I was like, forget investing into index funds, forget investing into Apple and Microsoft. I was trying to invest into any other stock besides that to be prideful and say, hey, I beat the market, or I beat my portfolio is up and I didn't have to invest into Microsoft and Apple because of the low yields, right? And so I remember having Texas Instruments and all these other IT companies. And this when I started investing around 27. I'm 35 now, and I begin to see yes, they increase. Sometimes they increase their dividend by 14% or whatnot. But then I start to realize that, man, I'm not getting the portfolio rate of return that I want and need. And I begin to see, yeah, you're not supposed to compare yourself to other investors, but I begin to start to see man, by investing, I saw a guy with a portfolio, and I follow him in my YouTube channel. He has 10 positions in. His two tech positions is just Apple and Microsoft, and rather market it goes up and down. He invests 50% of his tech pie in just Apple and Microsoft, and he's just going to just ride with it. And when you look at the SP 500, I mean, it's really 50%, like tech heavy, and then the rest is value play. But it's the two top players is Microsoft and Apple, and then you got and then it breaks down a little bit, Broadcom, Nvidia, Google this, but and then I start to realize that I need to get Apple, and I need to get Google. I need to get Apple, and I need to get Microsoft in my portfolio, and that's why I have Microsoft now, and in the next couple months, I'm gonna get Apple back in my portfolio, and I'm going to build around Apple and Microsoft. and then I have other stocks that I love, like J.P. Morgan Chase, Caterpillar, um, Illinois Tool Works, uh, and Chevron and Home Depot. I love these stocks. It's going to be my core. It's going to be my core slash sidelight, but I'm definitely going to build around applesauce. Sorry, applesauce, Microsoft, and Apple, not applesauce. Okay, here's my Roth. Here's my Roth IRA. Another thing that has helped me propelled me into over 100K net worth in dividend stock portfolio, dividend growth stocks, is I I begin to really focus more so and start to invest more into my Roth IRA. I was really, be honest, I wasn't taking serious. I was like, I was putting $200 here, $200 there, $200. Now, in these last, I want to say 3 or 4 months, I've been consistent. $500, boom, $500, $500, $500. And next week I'm put $500 because now one of my goals. I know I'm not going to hit this year, but I want to look at my Roth IRA and I want to see 20K, or at least I want to see 20 to 25K for me to be like, you know what? Even if I was to never to invest into my Roth IRA again, going, because I still have what, I'm 35 to 59 and a half, to have QQQM, Lam Research, SMH, Aapl, SCHG, Amazon, NVIDIA to grow and compound for the next 15 years, 16 years, 15, 16 years. Well, no, actually, what, 26, right? Yeah, or 20. No, 20, 24, 25, whatever. 59 and a half, right? I'm only 35. So, yeah, that's like what, 20, 24 years, whatever. Uh, and as you see, a common theme, I sold a lot of things that was in my Roth IRA, and I I got growth. I want growth. I want growth. I want growth. I want to grow. I want to retire by 50. I want growth. I want growth. I want to have $1 million portfolio. I want $1 million net worth. I'm close. I'm building steps there. And hopefully you guys see the common theme: growth, growth, growth. Time in the market beats time in the market. Lastly, here's my rollover IRA. I just recently have done a uh, complete overhaul, and we're gonna see how it's done. I sold some gains of Nvidia, $1,000, and with that $1,000, I all of the stocks right here that you see that's in green, that's from AJG and up. I have held over 5 years. Everything that's under AJG, I bought this week. And what you realize is that in a temporary, things are going to be in the red. Things are going to be in the red. Things are going to be volatile. Things are going to go up. Things are going to go down. But when you think 3 years, 5 years in advance, and I got Nvidia, Costco, Centos, KLAC, which is semiconductor, Applied Materials, semiconductor, Eli Lilly, healthcare, AJG Insurance Company. I know it's weird, but I just always wanted this company. Cadence Systems, the AI technology play, haha. Vertiv Holdings, VST. VST is energy. I wanted. It's Chipotle is down, but I've always wanted to share Chipotle, but it's always been so expensive. But I already know Chipotle is going to use its profits to increase more stores. I go to Chipotle a lot, and then Chipotle just open up a store right next to my neighborhood, literally like really 2 minutes away, and why not? And then lastly, me contributing to my 401k and really getting serious with that. Uh, that's been helping as well. A year ago, that's 5,400 that I didn't have, and now a year later, that 5,400 has added to catapult my net worth to over 100K. Because believe it or not, a year ago I was at 74,000. Yeah, A year ago I was at 74,000, and recently I put 5,000 right here in my money market account. I started the year off. I started the year off right here. It was at, I want to say, 49,000. My Roth rate. I started this. It was at like roughly, I want to say, 8,000. And here my rollover RA, this was at like 20,000, and this was at zero. And I've really have been juicing and been really trying to get it up to increase my net worth. And then now I've talked you guys through in my thought process of growth, 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 growth. That's how I've been able to get to meet a dividend stock portfolio of a liquid net worth of 100K. I'm not stopping. I'm keeping going. I'm keeping going. And then lastly, what I want to show you guys is this. Lastly, this is what I plan on doing in October to really shake up my portfolio real quick. Just so you guys see, I'm going to sell TSM. I'm going to sell Morgan Stanley, J&J, Costco, and Mo, Parker Hannifin, a combination with $3,000, and then I'm going to put, I'm going to match it with $1,150. That's roughly $11,000, and I'm going to do a portfolio overhaul, and hopefully with these changes, I'm going to shake up my portfolio. I'm going to spend $1,000, $11,000, not just 1,000, 11,000, and I'm gonna buy all these stocks. And United Rentals and CSL, Paychecks, PLD are all going to be new. I'm going to start a new position with Aapl. I'm going to start a new position with Lamb. My portfolio is going to be very volatile, and then there's certain stocks that I'm going to keep, that I'm going to continue to add to, like Pepsi, J.P. Morgan Chase, Illinois Tool Works, American Express, and Caterpillar. And so, as you see right here, that's what I plan on doing. And hopefully, these moves that I make are going to help propel my portfolio from, probably 100K net worth to 300K, 500K, and then hopefully one day $1 million portfolio. So I got work I need to do. I got work that I got to do. But hopefully you guys learned something from my video in regards to how I constructed everything from top down, the reasons for different accounts, why I put money here and bought this stock and bought this. And hopefully as you begin to create your philosophy and your way of doing things, and hopefully you guys learn something. Remember, Fab Five, the Magnificent Seven is your friend. It makes money, and it's been consistent. And I've been trying to fight it, and I'm not fighting it anymore. And hopefully, you guys you're not fighting it as well. Hope you guys make sure you like and subscribe to my channel. Show me some love, share my content, and hey, show your boy some love in the comments. Bye.